Hello friend, today the topic is what is First Republic Bank personal line? Personal line of a credit is an unsecured consumer loan that consists of a 2-year interest only, revolving draw period followed by a fully amortizing payment period of the remainder of the term. Draws are only permitted during the repayment period. What is personal line of a credit for? Personal line of a credit are open-ended loan which allowed the borrowers to withdraw fund as needed for a set period of a time. The fund can be accessed through bank transfers or a line of a credit checks, and the borrowers is allotted to a credit limit for the term of the loan which cannot be accessed. What is personal line of a credit and how does it work? A personal line of a credit is a set amount of money from which you can borrow for a given period of a time, referred to you as your draw period. Similarly to a credit card, you draw for its available balance. You draw from the available balance only amount you need and you pay interest on the amount. It is good to have a personal line of a credit. If you have a good or excellent credit, you might consider a personal line of credit. Lenders typically look for a strong credit, since a personal line of a credit is not backed by any controller. This type of funding is usually best for consumers who need to cover some personal expenses in short period of a time. Is a personal line of a credit the same as a credit card? Personal line of a credit functions similarly to a credit card. According to the Consumer Financial Protection, when you open a line of a credit, the lender gives you access to a set of amount of money called a credit limit. What happens if I don't use my line of a credit? If you never use your available credit or only you use a small percentage of the total amount available, it may lower your credit utilization rate and improve your credit scores. Your utilization rate represents how much of your available credit you are using at a given time. What credit scores do I need for a personal line of a credit? The minimum credit score to qualify for a personal line is typically 610 to 640. Can you withdraw cash from a personal line of a credit? Personal line of a credit are only temporary. When you apply for one, you will usually be given a specific time period for when you may withdraw funds, called a draw period. If you still have an unpaid balance on your personal line of a credit, when the draw period ends, you will enter which is called repayment period. Does an opening line or a credit affect credit scores? A long-standing personal line of a credit adds to your length of a credit history. However, a new line shortens your overall history of accounts as well, closing a personal line of a limit. A shorter credit history may lower your credit score. Does opening a line of a credit affect credit score? A long-standing personal line of a credit adds to your length of a credit history. However, a new line shortens your overall history of account as well, closing a personal line of a credit. A shorter credit history may lower your credit score. How long does it take to get approved for a personal line of a credit? A personal line of a credit may approve within 2 to 6 weeks. A business line of a credit can take anywhere between a few weeks to a few months. Is a line of a credit to a loan? A line of a credit is a flexible loan from a financial institution that consists of a defined amount of money that you can access as needed as repay either immediately or over time. Interest is charged on a line of a credit as soon as money is borrowed. What is some advantage or disadvantage of using a personal line of a credit versus a credit card? A distinction worth pointing out is the difference between a line of a credit and a loan. Unlike a loan, a line of a credit has built its flexibility. It means advantages or disadvantages is that it typically comes with a higher interest rate. A line of a credit is present loan amount which borrowers don't have to use it all. How long do I have to pay off a line of a credit? Around 10 years. So basically, typically lasts around 10 years or so on to follow the phase in which you must have to repay the outstanding principal draw as well as interest on the principal. It is better to owe line or a credit card. While some vary by lender, these advantages may take credit lines better suited to a large purchases that you intend to pay off over time. What is the difference between line of credit and a personal loan? A personal loan gives you a sum of money upfront and requires fixed monthly payment throughout your loan term. A personal line of credit, on the other hand, lets you withdraw as much cash as you need at any point in the time and pay it back on your own timeline with the variable interest rate. What are the risks of a line of credit? Since many lines of credit are usually secured by your home, that means you owe more the bank more than just your mortgage. If you purchase a vehicle using a line of credit and unable to make a payment for any reason, you will be eligible to lose more than just your vehicle. How do rich people use line of credit? The advisor says the wealthy frequently do exactly the using financial tool known as a securities-backed line or a credit or SPLOC. This is a lending product that allows someone to access some portion of the cash value, usually 50 to 100%. Does closing a line of credit hurt your scores? A line credit card can be cancelled without harming your credit score. Just remember that paying down credit card balance first is key. Closing a charge credit won't affect your credit history. What is a good interest rate for a personal line of credit? The best personal loan interest rate currently range from about 3% to 36%. The actual rate you receive depend on multiple factors such as your credit scores, annual income, and the debt to income ratio. It is a good idea to get a personal line of credit. Depending on your need and circumstances, opening a personal line of credit can be a good idea for securing flexible access to funds for a large planned expenses. This type of financial product provides you with access to a set amount of money for a fixed number of a year. What are the disadvantages of a line of credit? With easy access to our money from a line of credit, you may get into serious financial trouble if you don't control your spending. If interest rate increase, you may have difficulty paying back your line of credit. Our line of credit interest rate annual. Also, like credit cards, line of credit tend to have relatively high interest rate and some annual fees, but interest is not charged unless there are an outstanding balance of the account. What is personal line or a credit versus personal loan? A personal loan gives you a sum of money upfront and requires fixed monthly payment throughout your loan term. A personal line of credit, on the other hand, lets you withdraw as much cash as you need at any point in time and pay it back your own timeline with the variable interest rate.